Once a month, Paula Pant, host of the Afford Anything podcast, answers voicemail questions the listeners send in. Here's one now.
Hi, Paula. My husband and I live up in Vermont with our 2 children. We currently have 4 rental units, 1 multifamily and 1 single-family rental. It's going well, but we're tired of winters. We're thinking about selling everything and starting over someplace new. We were wondering what you would do if you could start your investment anywhere in the country. Would you choose to do a multi-unit? Would you choose a few single-family rentals? And where would you go?
What a great question. First of all, congratulations, Krystina, on those awesome what you've already built. You've got 4 properties. You've done some great stuff. So actually, before I go into my answer, kudos to you for doing all of that, because you know what I love about that is people who listen to this show, I'm just going to make more blanket statements now, people who care enough to take their finances into their own hands, whether that is through real estate investing or putting money into your retirement account or paying off debt or just paying attention to your money, regardless of what form that takes, people who care enough to do that are generally the type of people who take matters into their own hands. They make stuff happen. They don't just let life happen to them. They take responsibility and take action and actively create a better life. And I love that. And that's why I love this community, because it's just a community of people who build and create and imagine and then bring that imagination to life. And there's something really beautiful about that. I am totally straying away from your question. So let me get back to that. So there's kind of 2 parts to your question. Part of it was where within the nation would I invest? And the other part was would I focus on single-family homes or multi-units? Since I've already been talking about where within the nation I would invest, I'll go a little bit deeper into that. I've talked about the Midwest and the South. I've talked about the neighborhoods or the areas. Be cognizant that you are looking outside of the areas that have a Bed Bath & Beyond, because there are a lot of neighborhoods that don't. And, the neighborhood that I grew up in Cincinnati, Ohio, there's a house, there are houses there today that are for sale for $50,000. I could buy, and that's crazy to me. I went back to Cincinnati last year. I went for my high school reunion and I drove around that neighborhood and I looked at some of the houses that were on my same street or 1 block over. And I was like, oh my goodness, I could buy this in cash right now. And that blew my mind. That was just, wow. Okay, wow, I keep getting distracted. I'm not answering your question, but yeah, wow. So anyway, there was no Bed Bath & Beyond in my neighborhood, but it was a great place to live. I grew up there. I sold Girl Scout cookies there. I enjoyed it. Please. And I say this in my course material, and I tell this to the beta testers. I'm trying to repeat this as much as I can. Please don't be afraid of things that might be different from what you've previously experienced. That's not to say that you shouldn't do your due diligence. That's not to say that you shouldn't get the facts and the information. And sure, there are neighborhoods that are genuine war zones, as many investors call them. And by the way, that term war zone used to offend me because I used to think people who say that don't know what an actual war zone is like. And then I saw some of those neighborhoods. There's a particular neighborhood in Atlanta that I would not feel comfortable there even in broad daylight. So yeah, there are some neighborhoods like that for sure. I'm not denying the existence of those places. I'm just saying that you should put, not you, but generally people should put some conscious thought into where they've calibrated the bar and make sure that you're setting your bar based on actual data and information rather than just a general discomfort with the fact that there is a mini market nearby that sells single serve items mostly, and there are a lot of check cashing businesses nearby. There are a lot of perfectly safe neighborhoods that have those types of businesses around. So, and I grew up there. I think that's part of what makes me a good investor is just understanding those areas. And like anything, the more that you experience certain things, the more you sort of develop a cultivated eye around certain areas, the more you know what to look for, the more you can suss out what's on the surface from what's truly underneath. I hope I'm not being too esoteric. Please stop me if this is getting a little bit too high, fluffy in the clouds. I feel like I should tell a joke right now just to lighten the mood. I've been listening to a lot of jokes through hey Alexa, tell me a joke. And I don't know if anybody else finds them funny, but I totally crack myself up. So here we go. Hey, what did Earth say to the other planets? You guys have no life. Okay, back to your question. So to answer your question, where would I invest? I typically look for Class B neighborhoods in the Midwest and the South. That's the shortest and most direct answer to that question. As far as multi-unit versus single-family home, I theoretically prefer multi-units because of the consolidated overhead. When you're buying a property, the physical structure, the building itself, is your primary asset because that building is the thing that you're renting out. That's what generates cash flow. The underlying land is overhead. That's why it's hard to find good returns in areas where the underlying land value itself is high. So that's, now that we're 20 minutes deep into the podcast, I feel like I've actually finally said something useful. That's one key thing to remember. Generally, when you're looking at different areas, look at places in which the underlying land value is low, because you're not going to be making any money off of that. Okay, that being said, the reason that I like multi-units is because you consolidate multiple units, multiple properties, effectively, on one single piece of land. So you consolidate your overhead. In addition, you also consolidate your literal overhead, the roof, as well as, just a lot of other expenses. You kind of get some economies of scale going. So in theory, for those reasons, I like multi-units more. But that being said, the reason that I own so many single-family homes is just because, frankly, there are more of them. And when you've got a bigger supply and you're looking through that supply, it's like shopping for clothes. You look at the clearance rack, you're going to find some good deals if you keep looking. And so that's what happened with me. Every time I went to buy a property, I would always start my search intending to buy a multi-unit. And at some point within the course of that search, I would stumble across a single-family home that I thought was fantastic. And it was such a good deal that I couldn't not buy it. So that's the reason that I ended up with a portfolio that is predominantly single-family homes. It's not because I prefer them. It's just because there are more of them, and therefore I just ended up finding some great deals there. So I guess that's a really long way of saying I like them both, and unless you have a compelling reason to go for one or the other, I would just be open to both and go where the deals are. So I hope that helps. Best of luck with this transition. I'm excited for you.
Hey, did you enjoy this excerpt from the Afford Anything podcast? Then click to download our free ebook, Escape. You'll be taken to a page where you can enter your email for immediate access to everything you need to know about escaping the 9-to-5 grind to live life on your terms. And you can also subscribe with one simple click to get alerted when new videos are uploaded.